Hey there, future Wall Street wizards. Welcome to the thrilling world of the share market. Ever dream of owning a piece of your favorite companies? Imagine having a stake in giants like Apple, Google, or even that cool startup you love. That's what the share market lets you do. It's your gateway to becoming a part owner of these companies and sharing in their success. Now, I know it can seem like a confusing jungle out there with all the numbers and charts, but don't sweat it. We're going to break it down together, step by step. From understanding basic concepts to mastering advanced strategies, we've got you covered. Think of this essay as your trusty guide through the exciting world of investing. We'll explore everything from how to pick the right stocks to when to buy and sell. We'll ditch the boring jargon and keep it real, just like on Mad Money. No more feeling lost in a sea of financial terms. By the end of this, you'll be tossing around terms like moving averages and PE ratios like a pro. You'll understand what they mean and how to use them to your advantage. Get ready to learn, get excited, and most importantly, get ready to make some money. Let's get started, folks. The journey to becoming a savvy investor begins now. Imagine your favorite company is baking a giant apple pie. When you buy shares, you're basically buying slices of that pie. Each share represents a small ownership stake in the company. When the company does well, its pie grows bigger, and so does the value of your slice. This means your shares are worth more. Conversely, if the company hits a rough patch, the value of your shares might decrease. It's all about supply and demand, folks. More people wanting a slice? The price goes up. Fewer buyers? The price goes down. Now, let's talk about the Nifty 50, one of the most important indices in the Indian stock market. This index tracks the performance of 50 of the largest and most actively traded companies on the National Stock Exchange of India, often referred to as the NSE. Think of it as a snapshot of the overall Indian stock market, providing a comprehensive view of how the market is performing at any given time. Reliance Industries, the energy giant, is a major player in the Nifty 50. This company has a significant influence on the index due to its large market capitalization. Say their latest oil discovery boosts their profits. Boom. The stock price of Reliance Industries would likely surge. You'll likely see Reliance's stock price jump, and that influences the entire Nifty 50 index, causing it to rise as well. On the flip side, take Infosys, the tech powerhouse. Infosys is another key component of the Nifty 50, known for its IT consulting and services. If a global economic slowdown hurts their IT consulting business, their stock price might take a dip, impacting the Nifty 50 as well. This shows how interconnected the companies within the index are. The share market is a roller coaster, but with the right knowledge, you can learn to ride the waves. Understanding the Nifty 50 and its components can help you make informed investment decisions. By keeping an eye on the performance of these top 50 companies, you can get a sense of the overall market trends and potential investment opportunities. Remember, knowledge is power in the stock market. Stay informed, stay vigilant, and you can navigate the ups and downs of the market with confidence. Speaking of waves, let's talk about stock charts. These bad boys are like treasure maps for investors. They visually represent a stock's price movements over time. See that upward sloping line? That's an uptrend, signaling increasing investor confidence and potentially higher prices. A downward slope? That's a downtrend, indicating selling pressure and possibly lower prices. And then there are sideways trends, where the stock price moves within a tight range. This could indicate a period of consolidation before the next big move. Exciting, right? Section 5. Technical versus fundamental, two sides of the same coin. In the world of investing, these two methods are often seen as opposing forces, but they are more complementary than you might think. Now, to really understand those chart patterns, you need to master two key analysis techniques: technical and fundamental. Each offers unique insights that can help you make better investment decisions. Technical analysis is all about studying past price and volume data to predict future price movements. By examining historical trends, you can identify potential opportunities and risks in the market. It's like reading tea leaves, but with charts. You look for patterns that suggest where the market might be headed next. You'll use indicators to spot trends and patterns. These tools can help you determine the best times to buy or sell a stock. Fundamental analysis, on the other hand, dives into the company's financial health. It's about understanding the intrinsic value of a stock by looking at the company's overall performance. Think earnings, revenue, debt, the nitty-gritty stuff. This method helps you assess whether a stock is undervalued or overvalued. It's like giving the company a financial checkup. You evaluate its financial statements to get a clear picture of its health and future prospects. Both approaches are crucial for making informed investment decisions. By combining technical and fundamental analysis, you can gain a more comprehensive understanding of the market. It's like having two powerful weapons in your investing arsenal. Each method has its strengths, and together they can provide a balanced view that helps you navigate the complexities of the stock market. Section 6. Moving averages, spotting the trend. One popular technical indicator is the moving average. This smooths out price fluctuations, helping you identify the underlying trend. Think of it like squinting at a painting to see the bigger picture. Two common moving averages are the 50-day and the 200-day. When the 50-day crosses above the 200-day, it often signals a bullish signal, suggesting potential for upward momentum. Conversely, a crossover below the 200-day can be a bearish signal. Remember, no indicator is foolproof, but moving averages can provide valuable insights into potential price trends. Section 7. Reliance versus Infosys. A tale of two companies. Let's apply fundamental analysis to our Nifty 50 examples. Reliance Industries and Infosys. Reliance, with its vast energy operations, typically has a lower price-to-earnings (PE) ratio than Infosys, the tech giant. This means investors are paying less for each rupee of Reliance's earnings. However, Infosys, known for its innovation, boasts higher profit margins and return on equity (ROE) compared to Reliance. This indicates Infosys is more efficient at generating profits from its shareholders' investments. See how different industries and companies can have vastly different financials? That's why fundamental analysis is crucial. Section 8. Your first steps. From brokerage to portfolio. Ready to jump in? First, you'll need a brokerage account. This is your gateway to the stock market. Choose a reputable online broker that suits your needs and budget. Don't put all your eggs in one basket. Diversify your portfolio by investing in a mix of companies across different sectors. This helps spread your risk. Remember, investing involves risk. Start small, invest gradually, and never invest money you can't afford to lose. Patience is key, folks. Section 9. Ready, set, invest. Take charge of your financial future. Investing in the share market can be your ticket to building wealth, reaching your financial goals, and achieving financial freedom. It's about taking control of your money and making it work for you. Don't let fear or lack of knowledge hold you back. There are tons of resources available, from educational websites to financial advisors, to help you on your investing journey. Remember, the best time to plant a tree was 20 years ago. The second best time is today. Section 10. Join the Mad Money crew. Let's get started. Now that you're armed with this knowledge, it's time to take action. Head over to my website and sign up for my free Mad Money newsletter for exclusive stock tips, market insights, and more. Plus, as a special bonus, the first 100 people to sign up using the code NIFTY50 will receive a free copy of my best-selling book, Get Rich Carefully. Don't miss out on this incredible opportunity to boost your investing journey. Let's make some mad money together.